I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Glad to be back, Jim.
This tariff war deal, nobody seems to want to back down or blink on this. What's this doing to the markets, and does it actually create opportunities for people to take advantage of it?
It's interesting to watch this continue to evolve. Obviously, nobody wants to back down. Obviously, nobody has backed down so far. The tit for tat continues. I think at the end of the day, I'm going to stand by comments I said earlier. At the end of the day, higher costs like this, they just get passed on to the consumer. And yes, that's generally speaking a break on the economy, and you could view that as bearish for commodities, but it's widespread, it's diffuse. The population keeps going up. The population needs stuff. The global economy so far continues holding on. So I don't see it as too bearish. I just see this basically as a cost that has to work through. But as each tit for tat hits the markets, there's volatility, there's uncertainty, and you see not just commodities, but related equities of all stripes, and assets bounce around as the news hits. So overall, I think the expectation is just for higher volatility. And the question then becomes, well, why aren't the safe haven assets like gold and silver, the precious metals, why aren't they doing better? I've said before, it's funny, I've recently seen it echoed in the financial press. Since China specifically in the crosshairs of the trade war, and the Chinese are the number one buyers of gold in the world, if they're worried, they don't really view gold as a trading sardine. That's where they put savings. And if they're tightening up and battening down the hatches, it's not time to build up savings. It's time to fortify yourself. So I think there's been a depressed action on Chinese buying, and I think that's going to be limited in time. I won't give you a takeoff date, but when that's done, I think we will see precious metals respond.
Well, China had gained the second largest equity market in the world, and now they're behind Japan. They're in third place. Is the Chinese equity market in trouble?
Well, that's a question for somebody with more PhD than I have, I think. But it is interesting to observe. And, as we were saying, nobody's backing down. They keep ratcheting up. But China's certainly showing signs of pain. And one has to wonder, at some point, might they back down? If they get hurt bad enough, might they back down? But I just can't see it. I can see the stoic Oriental rather shouldering on, taking the lumps, taking the pain, taking the losses rather than backing down. I mean, I could be wrong. But that would be my perception, is that whatever happens here, nobody's going to back down. And unfortunately, I think that means we're just going to see a regime of higher prices, for pretty much everything in the world for some years.
Well, higher prices means people are going to be asking for higher wages to cover those prices, aren't they?
Which means inflation, which should again be good for certain things, but it all gets passed through in the end. I think in the end these price fluctuations and inflations, they work through the system. People ask for higher wages, but then they can spend more if they get them, and that pushes commodities up. But then if you've inflated the prices, are they really up? Inflation adjusted, everything is the same. I don't know that we can solve all these answers today, Jim. I think the main thing for people the main takeaway that you can bank on, as it were, is that volatility is here to stay, and it's not going away anytime soon.
Do you think the equity markets will continue to rise in North America?
Well, they sure are giving pause. And it's interesting to me that a lot of the high-flying tech stocks are showing signs of weakness. It seemed like Facebook could do no wrong. All the scandals, significant scandals and regulatory slapdowns that Facebook suffered in recent months, and it just kept going upward. But then we had a growth, disappointment, and suddenly it seems Facebook can correct. And, Snapchat is now having disappointing growth, and I don't follow all the different FANG stocks, but of course, Tesla has been shaking things up. One of the most invulnerable seems to be Netflix, but I think we're seeing that nobody's invulnerable. And if that sector, which has been helping the overall equities market so much, starts to correct or go into reverse in a serious way, we could see, the correction that we've all been waiting for the longer the bull market has gone. We've all said this correction has to come. That could be the trigger that we're seeing being pulled right now.
Well, Google, or I should say Apple, has hit $1 trillion in capitalization, but they're not the first company to do it. The Chinese petroleum company hit $1 trillion just before the big crash of 2008. So just because you're worth $1 trillion today, don't count on it, right?
Well, and it's just a number. I mean, is it more important to be worth $1 trillion than $999.99 billion? I mean, it's just a number. On the other hand, markets are made of people, and they do have their psychology. So I found it interesting that when the Apple headline started coming across the screen, a lot of reactions I was seeing was, whoa, that's a sign of a top. Like, people weren't celebrating, or people weren't taking this as proof of better to come. People were saying, whoa, that's a big number. Maybe this isn't so cheap anymore.
We'll have more with Lobo Tiggre right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, do you expect the gold-silver ratio to change anytime soon?
I don't know, Jim. That's another one for the PhDs. And I have to say that the research I've done in the past on the gold-silver ratio shows that they don't predict. I mean, when it gets too extreme, they do tend to converge, but that can happen either by the one that's higher than the other falling or the one that's lower than the other rising. So it doesn't the gold-silver ratio doesn't tell you which one is going to happen. It just tells you that one or the other is likelier to happen the more extreme it gets. So I don't find it very helpful in that regard. What I would say is, whether the precious metals take off now or not, the better companies can make money in the current price environment. I mean, when we first met years ago, we were dreaming of $1,000 gold sometime in the future, maybe if we took out the 1980 peak, right? But now that's in the rearview mirror, and people are complaining about $1,200 gold. But the better producers are making money there. And more specifically, with or without gold and silver rising, there are investment opportunities or opportunities to profit. For example, I happen to notice that Pan American Silver put out their quarterly earnings yesterday after market close. And they were very good. They were very strong. They had record low costs. So despite lower metals prices, the bottom line held on, and they were up in most other significant metrics. So a fantastic quarter, a great beat on Pan American Silver's part. And as we speak, the stock is up over 9% today. This is, one of the world's largest silver producers. This is a big company. So to rise 9% in a day in what we can, I think, accurately technically call a crappy market, that's really significant. The people are paying attention. And a company that can make money in the current environment is likely a company that makes spectacular money in a better price environment in the future. But whether that happens or not, it's still making money. And so I'll have a tip for your listeners here, for those who have muddled through our conversation about the tit for tat. They hear something much more specific and potentially actionable. I'm not making a recommendation. I'm just saying that Pretium Resources, Bob Quartermain's uber high grade Valley of the Kings discovery, now the Bruce Jack mine in British Columbia, they're due to put out their quarterly financials today after market close. Now here comes the speculation. That's scheduled, but I personally think they're going to beat. I think there's a lot of negativity about this company, understandably given its unusual circumstances, but I think excessively so. So I think they're going to have a great quarter. I think they're going to surprise the market to the upside. And that will happen within hours. I'm not telling anybody to rush out and buy Pretium. I do own the stock. I will fully disclose. But the fact is, there is an interesting event coming up in the very near term, and people who are thinking about it might want to do some research on that this afternoon.
We'll have more from Lobo Tiggre right after this.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, do you think copper has bottomed out?
I suspect it has, Jim. But whether there is a dollar price point ahead of us that's a few pennies lower than the one that's behind us, doesn't really matter. It's interesting to see Dr. Copper suffering so much at the same time as the broader narrative is that the global economy continues recovering. You know, the dollar is up, the Eurozone is healing, all these things happening. And yet copper sort of seems to be one of the ones that's taking on the chin. Copper and oil, actually, the most for the trade war. But these two things are not compatible. Either the global economy is recovering and growing, or it's not. And if it is, then copper demand can only go up. And on top of that, you have copper's essential role in the whole new energy paradigm. And people love to talk about lithium and cobalt and all these other things. But all of these gadgets take copper wires. There's a lot of copper in everything in industry really today, but all the more so for the new energy paradigm, gadgets, gizmos, cars, buses, even planes and trucks now. So I'm very bullish on copper, and I'm really not concerned where the bottom is. I'm mostly concerned as a buyer in looking for great companies. And of course, if people want to know more about that, they can come to independentspeculator.com, and they can see what I'm researching for free on our weekly digest, and they can sign up to find out specifically where I'm putting my own money in our monthly newsletter, The Independent Speculator.
If the U.S. is able to squeeze Iran out of the oil market, what do you see happening with crude?
I'm skeptical that can happen, Jim. Yes, they can put the squeeze on. They can make it more difficult. But we've seen in the past that there are other buyers who are quite willing to ignore the U.S. and its wishes and buy Iranian oil. And, with the U.S. going to trade war with its trading partners, all the less reason for people like, say, the Chinese to care what the U.S. wants anybody to do about Iran. So I suspect that Iranian oil will continue to flow. It will continue to come to market. One barrel of oil is much like the other. I don't think you can blockchain your way out of that one. So it'll pose an extra cost for Iran. They'll make less money, but the oil will still be there.
How's the petro yuan doing?
I do not know the answer to that, Jim, so I'm just going to say no BS. And it's a good question. Let's look it up.
China, Japan, India are talking about forming what they call the Oil Buyers Club. Do you think that's going to impact oil prices and keep them down?
It's part of a general theme we've seen, and a lot of writers have written big, giant headlines about, the BRICS and China and Russia specifically cooperating on projects trying to dethrone the United States dollar, the end of the petrodollar system. And I do think that's a trend in motion. And I do think that what you just described is part of that. But it's kind of interesting that we see these, exciting headlines in by July 21st, buy this stock because China and Russia are going to do this and it's going to change everything. And then the date comes and goes and really the world kind of keeps on going. So these changes are significant. They're important, but they're marginal, and they're all part of a ratcheting process that I think eventually will result in significant changes. But I'm pretty skeptical when I see headlines saying, you have to sign up now and buy this or do that before this date or you'll miss out, because that just hasn't happened.
Elon Musk, will he end up before the Securities Commission for his talk about privatizing Tesla?
Well, he can certainly afford plenty of great lawyers, so I don't know whether that'll happen or not. But I think it's an interesting idea, and it's something that I've thought about for miners, in the resource sector. You get these ambulance chasers that jump on the case when the stock goes down because of disappointing drill results, and then ambulance chasers jump on and they make it worse. But you know what? Disappointing drill results are not fraud. They happen. Mother Nature is tricky. And if you were insulated from these fluctuations on the public markets, you could just focus on getting the job done. So I absolutely understand where Musk is coming from. It actually makes perfect sense to me. Where you get the hundreds of billions of dollars to take the company private, even he himself couldn't do that on his own. So it would have to be a sort of insiders club of some very deep-pocketed people, or maybe some sovereign wealth funds. It'd be interesting to see just how private that might end up. But whether he ends up in trouble for it or not, I don't know that an argument could be really said that he's done the shareholders any harm. Because if they do take it private, they'll have to pay a premium to existing shareholders at the time. And so for the ones who don't want to sell, they'll get an exit at a win.
Do you see Elon taking his production to China, where they know how to make cars and they have a mandate to drive electric cars?
I suppose so. I mean, I don't want to try to predict somebody as unpredictable as Elon, but that seems to me to be a smart way to do things. It's actually kind of surprising that he has put so much infrastructure in California. I mean, not just Tesla, but SpaceX too. Why on earth would anybody want to manufacture anything in the People's Republic of California? Well, I suppose if you think of yourself really more as a tech company than a manufacturing company, then maybe California starts to make a little more sense. But the fact is that these are manufacturing companies with strong tech components. It makes a lot of sense to me to look for lowering your costs by looking for places where you've got lower regulatory burdens, great labor advantages. It makes a win-win. Elon could pay the average Chinese worker, double what they make in a Chinese company, and it would probably still save him an arm and a leg and a boatload to boot over what he pays in California.
Anything else we should be keeping an eye on right now?
Just generally, Jim, I know that people get tired of hearing this, buy low, sell high, but that's the reality. That's the fundamental equation here. And a so-called crappy market is a great market if you're a buyer. And I happen to be fortunate enough, if you want to look at it that way, that I was held off the market for years. So I'm a buyer and I'm buying. I'm enjoying the so-called doldrums this summer. I understand not everybody's in that position. If you're all in and you're suffering, I'm sorry. Don't despair. These are cyclical markets. They go down, they go up. But if you're not all in, I think there are some terrific buying opportunities out there right now. Profitable companies like we've been talking about, exploration plays that have projects that work even at current prices or even lower prices. There's a lot of guidance I have to offer, and a lot of it for free on my website, theindependentspeculator.com.
Lobo, thanks a lot for being on the show.
Thank you, Jim.
My guest has been Lobo Tiggre from theindependentspeculator.com. He was speaking to us from Puerto Rico. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.